We've just been through the performance of the shilling as it stands at the moment, many expecting it to stay firm as we progress through the first half of 2010. Let's go through influencing factors here. First and foremost, it's the resurgence of the agricultural and tourism sectors that's being anticipated. What's your outlook in terms of growth for the Kenyan economy?
Looking forward, we're seeing that all sentiments are for the economy to grow by around 4.2 to 4.5% compared with last year's levels of around 2.5%. The economies, the rebound of the economies like the tourism, the rebound of the sectors like the tourism and the agricultural sector, we are seeing those are going to support the economy very well. Also, on the back of increased inflows from foreign investors, it will be a plus towards achieving this kind of growth.
For now, there is this overarching level of optimism and exuberance in the markets and about the economy. Offshore flows into stocks and bonds are clearly evidence of this. What kind of support are we seeing, foreign inflows providing the local unit right now?
Actually, on the back of that was supported the shilling yesterday to close at levels of around 75.8. This inflow is actually targeting the equity and the bond market. The Kenya's bond market is quite very good at the moment. It has very good appealing rates compared to other countries around regionally. We are seeing like now the 2-year bond currently trading around at 8%. 5-year it's around 9.5%. If you compare this with maybe South Africa, where like the 5-year is at 8.5% and maybe the 26-year is around 9%, is quite positive, so that is actually encouraging investors to come looking for better returns in Kenya.
But a lot of this exuberance, one would assume, is dependent on the overall global economic picture as well. So is there a risk of Kenya seeing massive outflows if things don't pan out globally in terms of economic growth, as many of the forecasts are suggesting?
Not initially, because if you look also globally, they're not looking maybe to increase their rates maybe in the first year or even in the year 2010. So with the continued good rates in Kenya, for the year 2010, we expect these flows to actually stabilize and stay in the country, and this will actually support the country.
So for now and the short term, we're seeing the steady inflow of foreign capital into the Kenyan market, but political challenges persist in the Kenyan economy, especially when we've got the writing of a new constitution for Kenya coming to the fore, and many saying that this could dampen foreign investor confidence in the economy moving forward. How do you see the political arena unfolding through this year?
Yes, we still have the political risk of, as we go towards the 2012 presidential and the legislative elections. However, also looking at the enactment of the new constitution, where we are still in the process of making sure that this is achieved, we are seeing very positive results both from the politicians and as well as the country as large. So the political risk which may arise this year is quite minimal. So I expect that actually not to really affect the inflows or the sentiments outside there in the world. So positively, I think it's still very positive for the economy because the political risk actually is very minimum at the moment.
Let's look at another possible pressure point. The Central Bank of Kenya's accumulation of foreign reserves is a consideration to be made here. How do you see activity from their end playing out?
So far, I've seen maybe in the month of January, they have slowed down. However, looking at the foreign currency reserves, currently we are standing around $3.3 billion. That's equivalent to around 3.5 of import cover, 3.5 months of import cover. Going forward, as also the strength actually shilling strengthens, I expect them to be a bit active in the market. At least to build this reserve towards the 4 months import cover. But on the back of this, I don't expect the activity in the foreign currency market to really affect the positive, bullish outlook of the Kenya shilling.
Well, the shilling has, over the past 5 years, traded on fundamentals of course, supply and demand, largely staying in the range of between 70 shillings and 79 shillings. Do you see the local unit playing within this band for 2010 as well?
Sentiments for the Kenya shilling to actually be bullish and to close the year 2010 around levels of 72. So as you say, the ranges of 70 to 79, yes, would hold, but with a better outlook of the shilling actually closing just shy above of 70 for the year 2010.
Let's take a look now at the bond market specifically. We know that in the latter part of last year, we had local investors showing as much interest in the bond market as corporates issued bonds as well to raise capital to fund expansion moving forward. Do you see a shift of capital now as sentiment improves and risk-taking back on the table, that inflow back in towards equities?
Yes, at some point, as we look at the way the interest rates in Kenya actually have moved in the last 2 months, there have been a huge drop in interest rates. I would take an example. For example, late last year, before we closed the year, we saw that a bond of a two-year bond was trading shy above of just below 9%. Currently, it's at 8%. So on the back of this, I expect actually interest rates to continue coming a bit lower. However, maybe from end of February towards March, there will be a bit of stability in interest rates. So we might see a bit of sell-off or people taking a bit of capital gains on the bonds to transfer their funds towards the equity market, which I believe by that time we'll see a bit of robust in mainly on the company results. So people go buying the equities to take advantage of the outlook also on the economy on the company sides.